The minister designates whose nominations were confirmed by the Senate last week have been assigned portfolios. Well, the list was released by the Secretary to the Government of the Federation. Former Rivers State Governor Nyesom Wike is FCT Minister. Wale Edun is Minister of Finance and Coordinating Minister of the Economy. Dele Alake, Minister of Solid Minerals Development. David Umahi, Minister of Works. And Festus Keyamo, Minister of Aviation and Aerospace Development.
Minister of Communications, Innovation and Digital Economy, Bosun Tijani. Minister of State, Environment and Ecological Management, Ishak Salako. Minister of Finance and Coordinating Minister of the Economy, Wale Edun. Minister of Marine and Blue Economy, Bomi Tsunji. Minister of Power, Adedayo Adelabu.
Right, and Minister of State, Health and Social Welfare is Tunji Alausa. Minister of Solid Minerals Development, Dele Alake, just like we mentioned earlier. Minister of Tourism, Lola Adejon. Minister of Transportation, Adegboyega Oyetola. Minister of Industry, Trade and Investment, Doris Anite. Minister of Innovation, Science and Technology, Uche Naji.
Minister of State, Labour and Employment, Nkuruka Onyejocha. Minister of Women Affairs, Uju Kennedy. Minister of Works, David Umahi. Minister of Aviation and Aerospace Development, Festus Keyamo. Minister of Youth, Abubakar Momo.
Minister of Humanitarian Affairs and Poverty Alleviation, Betta Edu. Minister of State, Gas Resources, Ekperikpe Ekpo. Minister of State, Petroleum Resources, Henneken Lokbobiri. Minister of Sports Development, John Eno. Minister of Federal Capital Territory, Nyesom Wike.
Minister of Arts, Culture and Creative Economy, Hanatu Musawa. Minister of Defense, Mohammed Badaru. Minister of State Defense, Bello Matawali. Minister of State for Education, Yusuf T. Sonomo.
Minister of Housing and Urban Development, Ahmed M. Dengiwa. Minister of State, Housing and Urban Development, Abdullah T. Guarzo. Minister of Budget and Economic Planning, Atiku Bagudu. Minister of Environment and Ecological Management, that's Kaduna. Minister of State, Federal Capital Territory. Also, Minister of State, Water Resources and Sanitation, Bello M. Goronyo. Minister of Agriculture and Food Security, Abubakar Kyari.
We also have Minister of Education, Tahir Maman. Minister of Interior, Sir Aldo A. Alkali. Minister of Foreign Affairs, Yusuf M. Tugar. Coordinating Minister of Health and Social Welfare, Ali Pate. Minister of Police Affairs, Ibrahim Gaidam.
Minister of State, Steel Development, U. Megari Ahmadu. Minister of Steel Development, Shoaibu A. Audu. Minister of Information and National Orientation, Mohammed Idris. Attorney General of the Federation and Minister of Justice, Latif Fagbemi. Minister of Labour and Employment, Simon B. Lalong.
The list is not over. Others are Minister of State Police Affairs, Iman Suleiman Ibrahim. Minister of Special Duties and Intergovernmental Affairs, Zephaniah Jesalo. Minister of Water Resources and Sanitation, Joseph Utsev. And also Minister of State, Agriculture and Food Security, Aliyu Sabi Abdullahi.
And there you have it, a list of Nigeria's ministers designate and their portfolios. Moving on now, in a move to support the Naira and stabilize the foreign exchange market, the Nigerian National Petroleum Company Limited, as NNPCL, has secured a $3 billion crude repayment loan. The crude for cash funding was secured from Afrexim Bank at its headquarters in Cairo, Egypt, after a jointly signed commitment letter and term sheet. Well, the NNPC says it would repay the loan with crude oil at an interest rate between 8% and 11%. Well, this agreement will ensure there is an immediate disbursement that will enable the NNPC Limited to support the federal government's ongoing fiscal and monetary policy reforms aimed at stabilizing the exchange rate market. Meanwhile, The local currency appreciated on Wednesday, recovering from 950 Naira per dollar to 890 Naira to the greenback. Right, we have Arise analyst Dr. Sam Amadi joining us now on News 9. Thank you so much for joining us. Good to see you. Help us understand what's going on here. How significant, most of all, will this development, be to the Naira?
Well, I think a follow-up to the meetings I've been holding in the villa. Yesterday we heard that the president is committed to ensuring that the dollar does not crash further down. Sorry, the Naira does not crash further to the dollar. We saw a very disturbing slump. And so today, some little rally up but essentially, what this is all about is, you can't go to the IMF at this point, but you need to ensure that the petrol price, PMS price, does not go further up. There'll be some mixed messaging. The government says, look, price will not increase, but we're not reversing the policy.
Yeah.
So essentially, somebody has to stopgap, and that is to say that you see NNPC subsidizing at a much more, maybe more efficient.
There goes that word again.
But that's what it is. They're going to try first to show that this price does not keep going up. So if the market price is normal, stays where or lower, good for us. But if it goes up, we pay something. So they have to provide some funding for that. Two, the reality of the matter is that because we are an import-dependent country, and they talked about the speculators who are, maybe artificially creating demand for the dollar. Talk about healthcare, talk about tourism, education. This is time for summer, But in a few months, you'll be talking about people resuming school, maybe in August and September. So the demand for dollar is going to be high, and that means we might see the forex being as volatile as it is. So this loan helps government to shore up the dollar. So when government says they're going to defend the Naira, they don't mean to go back to a fixed exchange rate regime. They're going to use a lot of open market operations to support Naira against dollar. And so this borrowing a dollar to get involved in several transactions, some of the ostensible reason to pay for loyalties, to support marketers and all that, essentially we help to balance back the dollar supply demand of dollar. So more dollar would help the Naira to gain. And then when the Naira gains, actually, it has some impact on the PMS price, because even if there's no change in the import price and the landing cost, as long as forex changes, then the price will change in terms of how much we pay in Naira. So it's a wise policy for government to try as much as possible to keep the Naira strong to withstand the volatility and the changes in the global price, without necessarily changing the policy and creating back to a parallel market or fixed exchange rate. So these are all strategies to get A without getting B. You strengthen the Naira as against the dollar without necessarily changing your policy. But again, the question is still market operations. Would the impact be significant enough to withstand volatility? The question is how much volatility are you expecting?
Right.
And we pray that exogenous events outside the market operation do not create a disproportionate volatility that these operations may not. And again, it helps that they're going to pay with crude, even though there's still interest, and they're getting to offer exempt. So essentially, it's a safer bet than allowing things that they are, or going to IMF to borrow, and then they require you to deal with getting prices right.
Dr. Amadi, safer bet you call it. I'm trying to wrap my head around it. I'm not being pessimistic here, but what's the difference between this and previous swap deals? Talk to me about the risk analysis.
Well, the swap deal means that you are not necessarily getting cash back. Okay, what this means that you're borrowing dollar and having a larger supply of dollar in your economy without necessarily paying. So you're going to pay with oil in deferred terms. Maybe you're going to give them oil. So you're going to lose revenue essentially within a period of time, because when you give people back oil, that means you're going to have less foreign revenue arising from oil sale. Right. You have borrowed those, the revenue has already been borrowed. But again, the real trick here, and it's a trick, and it's just like bankers, some kind of financial engineering from the perspective of public sector, is that you are getting an influx of dollar that artificially, because it doesn't flow from any productive activity. The idea here, the long term and the real solution is to create an export market beyond oil, right, where you are actually earning dollar or reduce exposure to dollar, in which case lower tourism, education, lower health issues, and then some imports are not happening, substitutions maybe. So you are demanding less dollar and they're asking for more Naira. But because we can't do any of those things, because our economy is not productive and there are no policy instruments to create a productive economy now. So they're doing engineering, borrow dollar, give crude. In the short term, you beef up the Naira demand vis-a-vis. Okay. So you have a dollar, so you are reducing that gap between supply and demand of dollar. And then the Naira gets stronger, but essentially, right, fictionally in that sense. But it helps in the moment. Yeah, because you don't have the capacity to really sustain that kind of free market where people demand for Naira and then you demand less dollar, or you have more, sell more, and then you earn more in Naira.
So what you're saying, if I'm hearing you correctly, this is not a tumbo economics.
This is where the trouble. So you have to choose which options. And for government, the real problem now is reversal, and you cannot go. You won't go there.
How do we pay back? Because this is this a loan?
You're going to pay back with oil. That's the idea. Which means, if we borrow $3 billion, so we're going to pay back $3 billion worth of oil plus the 11% over interest. They didn't tell us the tenor of this agreement. So let's say it's 10 years, it's 12 years. Essentially, it's convenient for now for government. Unlike, so why it's different, like borrowing other money, is that you already denominated the repayment framework, which is oil. We're not going to be paying back dollar, we're going to pay with oil. And essentially, we're going to earn less from that oil because it's like swap, basically. And the only difference is that you're getting...
It's not penny wise, pound foolish.
In the long term, it might be, if you look at cost-benefit analysis in terms of assuming we did not do all these policies we are doing now, what we lose and gain. And now, so counterfactuals will be based on real accounting, social costs, real economical, financial costs. So if you have only one cost, okay, we borrowed money, we didn't borrow to IMF, so therefore we're going to pay with dollar. But then there's a forgone revenue from that oil.
When do we factor this is a high single-digit interest rate between 8 and 11%,
which is high.
11%. Yeah.
Which is high.
It is high.
The problem is just like when you have assets, physical assets, and you want to borrow money. You say, okay, I have 3 houses, I can give 4. But you're not really putting into context that those houses, if you didn't use their house to borrow money, you're going to pay. The house is a value. So there's a sense in which we're a crude country. We have the crude oil. So we feel like, okay, give us the money, swap. We'll give you the crude and pay. So we don't feel and that's why people keep borrowing. The reason why people borrow is that you are borrowing now, you're not paying now. So we are getting this cash, we are sorting out this problem. We will not have increase in fuel maybe, and the dollar will not rise. But down the line, start bearing the consequence.
All right, we'll have to leave it there. Thank you very much, Dr. Sam Amadi, for helping us understand the nitty-gritty of this. Thank you so much.